things don't work. And many of these things it's counterintuitive. So for that aspect, it's a problem because you cannot guide yourself through a training process by trusting your brain, so to say. You really need to try and error, and I'm doing this for like a good 30 years now, so I had a few trial and errors like we all did. Um, so I made a quick presentation to follow up. I call it "What Works" because that's literally the only thing that matters in my opinion, and I summarized what worked for me. So this is a very hands-on, practical approach. Next slide, please. What works is principles. Um, I'm actually a fanatic about principles now. After this process, because it works with everything, any kind of problem solving works on a principles basis. Why? Here's two definitions of principles. A principle is a fundamental truth or proposition that serves as the foundation for a system or belief, behavior, or chain reasoning. And that pretty much covers it. It's a truth. So you don't have to trust another trader. You don't have to trust a book you read, a course you read. It's the truth itself. For that, it's a high energy, meaning truth after love. That's the two driving forces of high energies on the planet. You can lead against this, and you need a lot of leading because in trading, it's not that you start with a burger stand, get successful, use that money, open a restaurant, and work yourself up till you have a few Michelin stars. You're working forever with failure, and statistically, most traders basically give up shortly before they actually would have their breakthrough because they're either out of money or they're out of trust to themselves. They just break. And that's why principles are your best companions, because you bring the truth, a high energy to, let's say, for example, a belief that's also a very strong energy, but still on a lower scale, to correct behavior. The second definition that I use to a general scientific theorem or law that has numerous special applications across a wide field. Wide field for being the focus, you need something that you can throw at everything because you're dealing with math, you're dealing with psychology, you're dealing with fundamentals, technicals, spirituals, whatever. It, trading encompasses so many variables that that's the reasons why most quants fail because due to a high probability of variables, you simply don't have the chance to just put this all in a box. No offense against quants, quite the contrary. I use a lot of quantitative methods, but I'm talking about extremes. So I'm an absolute fan of principles, and the great thing is you learn about yourself. These, as it says here, application across a wide field. You can use principles that you apply to trading just as well to any other obstacles in life. And for that, you become a better person as a trader. And with this tool in a faster way. Next slide, please. This is the three aspects that were talked about last week. Um, and I disagree. I enjoy the enthusiasm, similar like Matthew does, but I don't think that you can condition just a response and will have the solutions to those three massive aspects of trading. Um, so conditioning is very good for state control and as such for trading execution, meaning it's always good to get your superhero hat on and be that different person that you need to be for doing logistics of actual execution. So everything after the start button is hit for an entry to a trade when it comes becomes reactionary versus anticipatory, and when your brain should not be in the way any longer, but you're just following rules. That's where conditioned response is highly advisable and very effective. But unfortunately, conditioned response is how they were met. And for those who weren't here last time, Matthew basically introduced a methodology where you condition yourself in different aspects of life with coaches or and I have used methods of bandless, and I've been to Tony Robbins seminars, and I've worked with really good conditioners, but I can tell you at the end of the day, it's not working. And here's the reason why. Next slide, please. Discipline is a belief, to start with the first one, and a belief is a very deeply rooted aspect. Now, if you want to condition this at some point, let's say you're in a trade. To the right here, I just used that iceberg of what's how much more massive the energy is that you're working against the conditioned discipline belief. If you would have a trade where you buy at 20, you have your stop at 19, and would want to finance under the quad rules, the 1 to 2 risk conversion minimum at 22 with half of your position, um, you get closer to 19 and hope kicks in. And that hope that's kicking in of that times get better, where you're basically tempted to run a stop, that's like millions of years of survival because we as a species have hope to be a very positive effect to get in a positive mind when in adversity, because in a positive mind, whatever, you run away from the saber-toothed tiger, or you hide in the cave for a long time, starving, or whatever is required. But you're in a positive thinking mind frame. You're not like uh, totally broken down and in brackets get out at 19. And everybody's been there, I'm sure, is in the room of running stops, and you promise yourself over and over again, I will never do that again, and I will be more disciplined, and next time I'm getting out, and you still want to stop each time. So just a little warm up conditioning in the morning will not cut that. Now, since we're talking about what works, what's the solution? What works? You have to trade smaller. You have to trade smaller. I cannot iterate this enough. If you find the discipline, and often it means that you have to switch the object that you're trading because one share is still simply too much on the futures contract because you still get triggered on that hopefulness and adversity because the trade is meaningful to you. You can. I have not found another way to get out of this one. You have to trade crypto, for example, where you can trade extremely small lots, where you don't care at all if you lose it, and where you condition a response from an experience perspective, meaning you have 10, 20,000 trades where you realized, okay, with a good hit rate and with a good risk reward ratio, I am consistently, and you building that energy pole up that is bigger than the one that you're facing, whatever your personal fears are. Some people have more fear of missing out, other people have fear of pushing the trigger, other fear, whatever it is, it's very individualized. That's the way to go. That's at least in my experience, maybe even the only way, and if not a very harmonious way, and a way that will eventually work. At least it did for me and many of the people that I coached. By the way, this is not a marketing call. I don't coach much anymore. I don't have the time. I'm a full-time trader. So there will be no pitch, nothing to sell or buy. I need to do this purely from a perspective of contribution here, and that's all to the thanks of Matthew, who's sharing his resources. Next slide, please. From discipline leading to confidence, that's what it does. Repetition works, conditioning does not. What's the difference? The difference is conditioning comes from outside, meaning you're listening to this guy says, well, if you have the right trainer mindset, if you're doing the right thing, then this all works out. Um, fact so is repetition that comes from inside. a real experience field where you have 20,000 times from 20,000 executed trades a positive reaction. That's something, again, that's a principle that you can lean against. It's an ultimate truth. And here, just as the background, knowledge is the key. There is no secret. It's very important that these experiences that we have, they are effective experiences. So you cannot read this in the book. You cannot tell somebody how it is that you feel like being a runner from writing about running. You need to run yourself. And they have put the best minds in think tanks. They have chess masters together, whatever they all tried with really brilliant minds. These guys did not come ever up with a great training methodology because this is not an intellectualized sport and this is not a right brain solution obstacle to overcome. This is a very practical thing. And maybe going back to discipline at the end, because I said it's a belief. People often ask, let's say, for example, me, "Well, how come you never sleep? How come you never go to on vacation? How come? You have so much discipline." And for me, obviously, that's not discipline at all. I'm just a trader. So I do what I do. And if I would envy somebody who goes every day at 5 o'clock running for 20 miles, it's the same thing for that person. Yeah, well, I'm a runner. I just get up. I need to do that. I feel compelled to do so, and it's the most natural way. So discipline is not an effort. Discipline is not something that you can say, well, next time I get out at 19. You will get out at 19 when you truly believe that it's good for you to get out at 19 and carry that belief at the time when 19 is touched. And the problem what's overlooked is you can lip sync yourself all the way you want to before the trade that you're getting out, but when you're at 19 and you tapping into the subconscious hopefulness belief, then you will simply not get out because you think, yeah, well, at least break even. Uh, this has to bounce here. Here is support, and by the end of the day, you will get out at 16, and that's exactly when the market turns. And then frustration is even higher. Can we have the next slide, please? So all these monitors were basically also representing that this isn't about that you have the best computers or the most monitors or whatever. It's all about experience. Training is experience. You have to be for many years behind the screens. You have to have a certain amount of numbers of trades executed in the right mindset and mind frame. Um, that's where that's where the rubber meets the road. Finally, and maybe even most importantly, or at least on the same level, Matthew was talking about probabilities last time, and this is a very, very tricky one because it seems so, in brackets, easy. Um, like you have that trade sample size, for example, and you have $1 losers and $2 winners, and you have 14, you have 13 losers. So you lose 13 times a dollar and you have seven times $2 winner. That makes minus $13 on the losers and plus $14 on the winners. And you're still a winner even though you have a very lousy hit rate. So just to give one example of the probabilities. And they seem logical, they make sense, but we have nothing to work that with, meaning just like time, we don't have any kind of feeling for probabilities, any kind of measurement as a human to work this. So it's purely intellectualized. And since we cannot think or feel in probabilities, again, promising yourself that each trade, which truly is the case, factually is meaningless because the outcomes are random. Just because you understand that doesn't mean that it changes that you each time with every trade And even now, after 60,000 trades I executed, you still want that trade to go up. I'm not sitting there and thinking to myself, oh, it's just sample size. I don't care about that trade. No, I still want it to go up. And I still think about break even. And I just have disciplined myself to the fact that I have the experience that I still trade that small, that I'm very comfortable with my losses, um, that I can sustain sitting through a trade. And uh, truly, it really works because I use the Quadex, which takes care of these emotions because it makes you a winner at the beginning by quickly after entry you're taking half off. So that urgency to take partial profits or for other people full profits is satisfied, and on the other hand, the mathematical aspects are taken care of as well. Um, this first line here, human compare even through every moment is unique. That's that's one example, similar to probabilities where we don't have a measurement based on the Big Bang theory, which I think is in principle. Um, every moment is unique. We're completely expanding all the time, which means uh, all that stuff about technical analysis, where oh, this is at 19 again, just like last time, it's falsified. And why we have this unrealistic view of the world, where we compare and say, oh, I was at this party before, or oh, this guy looks familiar, or the situation looks familiar, even though the situation is completely brand new because every second popping by, the mix up of all energies in the whole world is all the time new, is that our brain couldn't simply fathom that amount of data. So what we're doing is we're comparing. We're not saying, "Oh, I have to evaluate a whole new set of data all the time." You just say, "Oh, okay, it's 5 seconds later," but that just feels like 5 seconds ago, even though it might be completely different. You might have had a car accident and your life will never be the same. So we have a lot of these flaws, and therefore it's very sensible to examine life, and especially in this case, training behavior, training material with a grain of salt and look for true principles and not something that somebody wrote down. Next slide, please. So to close this up with, what is it that really works? And I'm not saying that conditioning is bad. Matthew has definitely said uh, it's first of all for execution it's absolutely essential, and even for the other aspects mentioned of discipline probabilities and whatever the third thing was. Sorry, I'm also watching here for the open positions in the precious metal markets, and it's a very important thing here before the close. So I'm slightly sometimes distracted. Whatever works, what truly works is you have to check your ego at the door. The willingness to change is the most important thing. And in addition to to conditioning for these three specific aspects, um, it is important to use other methodologies just as well. So after you have a system established by collecting principal edges, and principal edges also for your psychology and for execution and for money management and for whatever the aspect you have to work on, um, you need other tools. So you have the conditioned states. That's important for a carefree mind for execution. You cannot expect if you kick the dog and hit the wife in the morning that you're coming home loaded with profits from the market, because the market reflects this is nothing else than another all other creative fields you get back of how you walk towards this. So the market will always find your weak spot, and you get better throughout time because hopefully you're on a path of betterment as a whole, as a being. Um, and again, center point, execute small lots. And for some people get ready with paper trading. So you have to find out what for you a small lot is. Small lot is not the smallest unit that market provides. Small lot is not that you have pressure because you wiped out three accounts and you need to make a living. Small lot is literally you do not care. You don't care. You just don't care. And when you don't care, you don't violate uh, your rules and your set up principle behavior because you're not tapping into these deeper, really hardcore states of stuff that's not good for trading because 95% in trading is counterintuitive. So that's why people don't walk away random. That's why people who participate in the markets and have no clue still are complete losers and have extreme bad loss ratios because they do intuitive behavior and throwing intuitive behavior in a counterintuitive field. The next thing is these small lots and successfully executing them, repeating it until it's proficient allows you to step up further. And that doesn't just mean financially, that means also psychologically you become a better trader by following your rules. You have to pat yourself on the back, not only if you walk away on a day with a few $1,000s trading winnings, but if you just did what was expected of you to do from a year rule perspective. Use the quad. It is an exceptionally great tool for many, many reasons: position building, risk reduction, stacking odds. That's a very good tool that I can recommend. And what I do and what has served me very well, each time I find that I do a repetitive behavior, something wrong, or I shouldn't say wrong. If if trading doesn't go right most of the time, it's just because there's a rule missing. So examine what just happened. Why did I feel awkward, or why can I not overcome a certain obstacle that seems to be appearing every day? Just scrutinize where maybe there is something because the devil is always in the details. That's especially true for trading. Just find a remedy of if I would have done that versus if I would have done what I did, and establish a new rule and hip pocket it to your overall trading behavior. Um, Sorry that I took so much time. I wanted to just brief and did babble as quickly as I could through this. I don't want to interfere with Nam's presentation and Matthew's and your guys' time, but I thought hopefully this brings a little bit value in addition to Matthew's great presentation of last week. And thank you for your ears and for your very valuable time.
Awesome, Corby. Thank you so much for coming on. So, Corby, is this presentation? Do you mind if I? Because folks are probably going to ask me for it. If I share it in the private channel there.
No, that's fine. This is all this. I just made this for you guys, so this is all to be had and enjoyed. You can also PM me if you want me to if you have questions or whatever. This anytime.
Awesome. All right. Well, we got some folks in the channel that said, "Thanks, Corby. I appreciate you presenting." Yeah, I do too. So, guys, just take it from this. You can't beat principles. You might be able to cheat them for a little while, but they'll catch up to you. So you might as well just condition them the best you can, and then through repetition, it becomes a skill. So, all right, Corby. I know you got like 40 or 50 charts open. I'm stressing out over two. So, there are, different levels to the game, guys.
That's
So,
okay.
all right. Thank you so much, Corby. And is Nam on? I don't. She I haven't messaged. We haven't gone back and forth in over 4 hours, so I had this intuition that she might not show. There's a fellow gister that I don't know who that is because I don't know who that name is. If that's Nam, she can unmute herself. If not, I'll just go
Well,
into it.
in that case, if there should be questions, I gladly
Yeah.
answer some questions. Because I'm aware I rushed a little bit through this material.
Well, repeat until proficient. Is that just so it's you get your habits down and then you just repeat it every day and then basically your habits daily will create something great And
It
just
is, it is directly related to the prior mention, which means execute small lots. You have to stay small because even those people who follow that rule, they grow too quickly. As soon as you, grow, let's say you trade one contract and you're proficient to that point that you feel comfortable that you don't violate your execution rules. It can still be that two contracts are way too much, meaning you might have another half a year to trade on one contract till you actually have that energy piled up to the point that you're ready for trading two contracts. So in the hundreds of people that I helped with trading, I don't know how often I said it. They asked, so what should I do? And I said, well, just trade smaller. Just trade smaller. Because it is fear or greed or any kind of these emotions that trigger us into uh, responsive behavior that's not conducive to trading. And as long as you be that disciplined to say, yeah, well, so it may take a year longer. Because, folks, the only thing that matters is consistency.
Mhm.
Once you're consistent, you can either hit up frequency or you can hit up size. But there is no rush. You cannot rush this thing. It's impossible. You cannot. If you're running out of money, well, then that's sorry. That's one thing that, of course, everybody breaks. You talk to a professional trader, and he says, "Yeah, I need 100 grand." Yeah, you have only 20. Yeah, you will. This will bite you because you need 100. I mean, I won't say you need 100, especially with crypto. You don't need 100, but you cannot bend, as Matthew just said, the principles. And repeat until proficient is meant that trade small, just trade small. And when you have a problem, yeah, step back, trade smaller again. I trade small as a money management rule for the different qualifications that I give a market. That I determine, okay, what's maximum excursion, uh, what's volatility, what's time of day, and I know for me personally that certain market conditions stress me personally out more than others. I trade smaller. I just trade smaller by a rule set, and it works. It really, I know from many years and many trades of experience that rule works. And you can trust me. This is not a shortcoming that at the end you're walking away with very nice profits. So it's just difficult to do at the beginning, but at least it's a lot less difficult than just to say to yourself, "Well, I will not run that stop." And after 100 losing trades in a row, you're like devastated about your self confidence. Why do you do this all the time over and over again? Um, there's a reason why the suicide rate is really high in trading. So do rather go that less attractive, less sexy route of just trading smaller. Anybody
Ross,
else a question?
yeah, Ross asks, can you remind how the quad exit is set up?
Quad exit is a very simple in its basic frame set. It's an all-in approach, meaning let's say you buy 100 shares of something, you buy 100 shares. So there is no averaging in. Well, by the way, I'm not a fan of martingale strategies. They're not. They're psychologically very and statistically very unsustainable. So it's an all-in approach. Let's say you buy at $20, 100 shares, and then what the quad says is you take initial profits. You take 50%, which means in this case 50 shares, after an initial win off. So let's say the price goes in your favor with an example of before where we have a setup of buying at 20, stop at 19, and financing target at 22. So as soon as the price reaches at 22, you take 50 shares off. Now you're left with 50 shares. Now, what's the advantage of that approach? You've just been made a winner because I'm sure you experienced when it goes to 21, you're already like, oh, give me something. And at 22, it's really tough to say to wait till whatever 30. But if you're taking half off psychologically, you're like, all right, I made $2 on half of this whole thing. Now, two things occur. You're left with half. That means also half of the risk. So you lost two. You won $2 on 50 shares. That gives you $100 profits. And now you have 50 shares left, and you don't even have to push to break even yet. Because often putting the other stop to 20, what most people do, just makes them get stopped out. You can still leave the 19 stop in, which means if you would get stopped out, you have 50 at a loss of $2, $100 loss, and you made $100 profit. So you have a break even trade and only pay commissions. That gives you choices. And choices is always really great in trading because it lets you breathe, it lets you trade what the market does and what some stiff mathematical rules. And let's say price comes back from 22, you're still feeling great. It goes a little bit negative to from the entry price to let's say 19 and a half. You're not sweating it. You're like, well, the worst that can happen is I wasted my time and I pay a little commissions. Then price goes up, and now it can sit till 24, let's say, just as an example. And 24 would be your next target. So what the quad says, first half out, and then comes a quarter out, so 25 shares. So at 24, you would take another profit of 25 shares. Now you have another profit of 25 shares, and that's another, now for a $4 profit, that's another $100. Now you have $200 in profit, and you have 25 shares left. And that's the ideal scenario because you made your money. You made $200, and your initial risk at the beginning was $100 because you had 100 shares with $1 stop to 19 from 2019, and that was your initial risk. So you already have a winning trade of a risk reward ratio of 1 to 2 if you now put your stop from 19 for the last 25 shares to 20. So that's it. You don't need more. What does that do? You have 25 shares that are pure bonus round. You're carefree. You don't mind because you make your $200. Money is made. And this is the really great thing because you can do with these 200 shares, with these 25 shares, whatever you want to. Meaning, you can say, I have another target at 30. You can say, I trail a stop and be advised, go to break even, but not further. Because it's logical that the further this thing runs, let's say it runs to 26, 27, the bigger, more likely is the retracement. So most people put the stop always at the wrong place, somewhere in the middle, because they don't want to give up on it. So if you don't have a quad and it runs to 27 and you were even able to hold a whole 100 shares to 27, you put your stop now at 23.50 or something like this. And here you get nicked out and you're still disappointed because you left half of the profits on the table. With a runner of 25, leaving the stop only at break even and giving this thing really room to wiggle and gadigle and in a strong trend develop, you can hold this. Let's say you're trading Bitcoin. I have I have still runners in where I bought Bitcoin at 3,000, and I will partially. I mean, sometimes I take something off, but I will still have runners in when we trade at 500,000, and these things had a risk of a few ticks entry. So that's the real money. So that's one of the benefits of quant psychology. One of the benefits of quants is that you have runners, or let's say you want to stake or just build a long-term portfolio. You can be a swing trader and simply take those last 25 coins off, put them on a ledger, and say that's additional profits, but I don't have to make dollar profits out of this or Bitcoin profits out of this. You can just take money off, so you can also position establishment, position build. Now think a little bigger instead of quad, make it a 6 or 8 tuplet, so you can also uh, do true pyramiding, size pyramiding without any risk, because pyramiding is really bad if you do this the common style. So there is a lot of possibilities on the quad that are all beneficial to especially a psychological mindset of a trader, and psychology is 99% of trading. So in short, um, a quad is all in, half off relatively shortly. So if you're a contrarian, you basically have a bounce scenario, and when that energy subsides, you just take partial profits. So you don't need big loss risk reward ratios, or a risk reward ratio of 1 to 1.2 is plenty for the financing point. So half off pretty quickly. Another target scenario of another quarter of the position size, and letting the last quarter position size running. So don't be greedy with that last part. That is supposed to be a bonus round. So if you have the scenario of financing at 22, next target at 24, you don't get out with at 25. I mean, you can have rules of strong counter signal on a larger time frame for an exit, or you can have whatever all-time highs. Let's say if you buy Bitcoin here and you have many positions and you take half of these position runners off at all-time highs, yeah, that's fine. But it's also good to just let this be free money. Just play money, where you say, yeah, I don't care. It's okay. If it goes somewhere, wow, great. I mean, you have to have profit-taking rules. I'm not just like a hodler with the rest, but give it give it room, and you will find that there is incredible potential left. Did that answer the question?
Yeah, I think so, right, Ross? And I guess this is probably a more advanced answer. Probably won't even have time for it. I guess the question I had is like, there must be certain conditions and criteria that you'd have to like designate. Okay, well, this runner, this is going to be for a longer term. This one is more for a day trade. I guess the market would dictate that. I guess that would be of interest is to say, okay, how do I designate this runner? What's the purpose of it?
Well, that will be depending on your system. So I personally, at some point after the first 20 years of trading, realized for myself that the true edges come from the point if you develop true edges, meaning something others don't use. So I don't have a classical technical analysis trading anymore. I trade prismatically through turning points, and then distribute trade entry points for low risk through time frames. So imagine you have a stop, a very, very small stop, maybe a quarter percent. Even on a volatile object like Bitcoin, it's maybe certainly never more than half a percent. But you also have this for all time frames. So I have a quarter to a half a percent of risk on a monthly time frame as well. Now, if you have a system like this, and you basically have six positions over 15, 60 daily, weekly, and monthly position, you treat the different runners for those different time frames. So the runner on the monthly would literally be like, yeah, well, I have a projected Fibonacci tool target of okay, my next expansion is at $127,000, somewhere in that region with Bitcoin. That would be a runner target for the monthly time frame. If obviously it's a 50-minute or a 60-minute target entry time frame, the runner would be somewhere half the way to the all-time highs. Whatever interesting points from a time perspective, I work a lot with time versus price, so it's a little bit difficult for me to talk in price because I use intermarket relationships in regards to time components. So I basically trade time cycles, and this whole thing is in real time. So I'm not projecting. I'm just following the market versus projecting targets, because it makes no sense to me why the market would stop at a certain price level that's based on classical technical TA that is not so much part of my trading anymore. Then they're there. So it's more like runners take care of themselves. You will. It's like having a dog. and you have one of these leashes that where the dog can run pretty far, but at some point that leash is just stopping the dog. If I get a constant pull or if I get a certain tension on that leash from let's say price, as I said in my case, it's more like time. There's no reason for me to get out of that trade. If if I'm in a sideways market where I don't have a directional favor, then obviously overshoots of the higher barrier is a good target. If the probabilities, I basically ask myself always, how much do I have to risk for how much do I have to get at any part on time of trading? So if I see that I would have to leave 10 parts for risk for that runner for 2 parts of gain, yeah, why not cash it in? I also don't have to be greedy and say everything has to go to the moon. No, you can, and that's the great thing. It's excuse my language, but I call it fuck your money. If the runner is fuck your money, and it doesn't matter because my money is made. I can also treat it like this, meaning on a scarcity day where I feel like, oh, I don't know, yeah, okay, so I go out and make myself feel good because cash versus the ring is always nice for everybody. If I if I had a really great week, yeah, why not leave something on the table? So what if I lose some for the next week? That's it's okay. So that's the great thing is that flexibility because it allows to compensate for human error, and this is what nobody does. This is the biggest problem in trading. Everybody is so baked after 5 or 7 years to just have a trading system that has an edge. And the edge is, let's say, something like 54, 55, 56, 57%. You will still fail because you not calculated human error that gets this back right to 50-50, and with 50-50 being frustrated because you're expecting 57-43, you again become a loser again because confidence goes out, and confidence is a huge aspect in trading. Um, I basically all the work that I do online in those free two channels that I'm working is nothing else than trying to ooze confidence by placing my trades in real time so everybody can see it is possible. Um, because I think that's the most important thing in the beginning, in the first 5 to 10 years that traders need to see is that you can't do this. It's just very difficult, but it is possible. And what the quant does is exactly that. It's a confidence building exit strategy because you get basically constantly rewarded. And that's how we just work as human beings. We're pleasure seeking and risk avoiding. Uh, risk avoiding. Here we go. That's a trader's mishap. Uh, pain avoiding. And that's exactly what I do. I avoid risk to avoid pain, and I seek pleasure, and that's why I use the quant.
Yeah, I mean, excellent. I mean, it's useful on all time frames, and you could just see it work time and time again, and satisfying multiple needs, financial, human needs, feeling like a winner. Ross says, "Thank you so much. That was great." Um, yeah.
Any other questions? And that can be not topic related. Any problems with your trading? Any personal? There's no secrets here. You can like anybody feel free. So because we have, it seems like we have the time now because the second speaker didn't show. I gladly answer any question that I'm asked.
Well, I have one. If it's, I started jumping. You guys jump in. I usually jump in first, right? So I had a funeral last Friday. I mean, did I do the right thing taking that off? Because I felt like, man, I missed some big moves in Bitcoin. I came back and I was like, don't come back and just want to trade. You know what I mean? And that's exactly what I did. So was that the right move, or is discipline mean you're just showing up every day no matter what, even when you don't feel like it?
Discipline is to do what you set out to do definitely a rule in trading is you don't want to ever trade in any kind of emotional states. That wedding, funeral, moving, fights with a spouse, whatever, all this stuff, no trading. That's no trading. So you follow the main rules. And I would say I start feeling very uncomfortable. That's just a personal trait. It doesn't have to be your case, but the world is a problem for me personally. It's just my personal experience. I come from a background of have a master's in audio engineering. I was a chef for a long time. I and have some classical training there, and I was a professional studio drummer, and I painted. So I come from an artist perspective background, and every of these things were social. So I was a failure in that aspect, meaning I tried really hard to sit the people around the table and get a group to grab our band together and paint for people for exhibitions. And all of these things worked only to a certain level because my enthusiasm was, I just expected too much from the people around me. I was restless and I needed something else. And I find comfort in the markets. So as much as I advise don't trade, meaning don't execute, I find true liberty in my discipline. Meaning, if I'm distraught, if I have personal problems, I know if I go towards the markets, I find stability, I find nourishment, creativity from a creative perspective, and I find comfort in the markets because the market, as much as it's very hard to predict, is it's very steady. It's always there. It always opens. It's the last business that closes and the first business that opens again. It provides for my living and my family. Uh, it it's never boring, and it always is uncomfortable to the way that I like it. Not everybody likes this proctology of all the time looking at yourself and all the time needing to be self-reflective, but it's something that you can count on. If you at a wedding or a funeral and there's all these emotions and all these it can get confusing and can distract from yourself. So not executing I find great, but maybe it's also good to still be present in the market, just to feel the pulse, to be um, many of the traders that I met, they don't really go on vacations and they still look at their screens, and they it's addictive. But I don't think that the addiction comes from a gambling aspect. I think the addiction comes from what I just said. It is very reliable, and humans, or at least in my situation, many humans like consistency. The market is very consistent. So on one hand, I would say don't execute, but maybe still have your consistent friend on your side for a few hours on these days.
Yes. Thank you for that. Tristan says, I guess executing small lots sort of reminds me of the 80-20 rule or the Pareto principle. Are they connected? I'm not sure. What's the 80-20 rule again? I mean, you have to at least tell me.
I
80-20 rule states that for many outcomes, roughly 80% of consequences come from 20% of causes.
I why don't I twist this the other way around? Um, I have a rule in trading that's the 80-20 rule, and the 80-20 rule in trading basically states that 80% is rule based and 20% is discretionary.
Hmm.
And what it really means is it is very hard to try to force something so alive like a market in a box in something where you say I know all of this, or will program a coder of all of this, or it's just too. You might have a dog. By the way, I don't have a dog, but I use the dog metaphor today. I don't know why. If you have a dog, this dog might be super reliant. You have to taunt him all the tricks, and you don't need a leash because. But there's this thing happening of the squirrel running by, and the dog's instinct is just to take off after the squirrel. And even though the dog is the most reliable thing, it will take off. This is that 20%, meaning um, leaving that room, and with discretionary, I mean more like leaving that room. It's very good to have a lot of rules. It's very good to uh, anything that you can predict, especially before an entry, when you're not bound to the fact that as soon as you press the button, now you have to do something, which is you have to exit at some point. You have to have rules when to exit, what, and you're bound to money exposed to the markets. Anything that you can do prior to that point should be scrutinized. But but you need to leave that room. I know that this is not a direct response to your question, but in a way, maybe you see that connection, which is everything needs a degree of freedom, a degree of choices. If you go to the ice cream store and they have chocolate and vanilla, that's not a choice because maybe you're the strawberry guy. So the minimum is always three. Two is never a choice. And obviously, 7 and 19 is better than three. So the degree of variant is something that allows us to
Garbage and recycle has to go out.
Sorry.
hello, everybody there?
Yeah,
That was
Tristan.
that.
I guess I guess someone was unmuted. Just following up on the rules, Corby. We worked for years together to get these rules and behaviors in place, and a lot of it was accountability. Lots of sheets, filling it out. Did you do the call? Did you do this? How did you do? Did it affect you? Did you win? This and that, and also conditioning reward systems for just showing up as well. Remember, it's like not just pressing the button. It's like we can come to the computer screen. So the question I have is, are the rules and things that we discuss here, are you at such a level now that it's implicit knowledge where it's just in a flow state, or are you also filling out sheets and things to condition things even to this day?
The answer is twofold, which means you obviously, if you have thousands of rules at some point, and I never counted them, but I have a lot of rules. Um, uh, some become second nature. So once the rules are super internalized, you obviously don't need to. I don't even reflect those any longer. Um, but everything new that comes in, or everything that's whatever, just a few years old, absolutely, I condition and fill out, and there are certain things that I, for example, have a daily call, just like you do, meaning I need my daily call because it's my orientation sheet for the next day. It's my order of what to do and or more importantly what not to do, what not to focus on. And so that's the yes answer. The other part is maybe a little bit more. It's a different question from a flow perspective. I did over the last 2 years, and I dabbled with this before. Um, Try to intuitively trade, which is very tricky and not for everybody, and um, possibly also not for myself. But I should say this, I had experiences that get more and more denser, where I'm just like, where I'm absolutely certain. I mean, I have a 88% hit rate, so that's already a good degree of certainty just from a rule-based perspective. But I do now. I'm in contact with that energy of, how should I say? I care that little, trading that small. To line this up with today's presentation, that have that at some point when everything comes together, it's just absolutely clear that that basket will go in. I have no doubt. There is just finally no doubt because I'm a person who is easily worried, and not a brave person, and so it also has to do with mental makeup. But I basically have grown through the market to a confidence level that's very healthy for me as a development as a person. And that's how I see the market. I don't see the market only as an abundant field to nicely work from home and provide for your family, but I think it's an incredibly great opportunity to become a better person because you just have to look at every skeleton in the closet. Otherwise, you're not making it through this field, through this minefield. And I'm very grateful to the markets, and I do have these flow trading states now more intensely. But I would advise, in general, including myself, to fill out the forms and be very pragmatic about trading. Trading should be boring, is what I always often say. Is when trading is boring, then it's right. Then you're the right. If you enter a position, you're already starting sweating it when you push that button. Then you either trade too big or you can count on that this is the loser. If trading is absolutely boring, then you're on a very good. Then you did your homework.